Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And before jumping to the charts, don't forget to hit the like button, share with your friends, and subscribe as well. We are exchanging my knowledge for your time, and both are precious. And let's jump into the charts. So this chart here I posted on Twitter back in the day. If I'm not wrong, it was around August or July last year. And this is part of the research I am doing on the markets, not only in the stock markets or in the US markets, okay? And you guys are already familiar with it. This is the seasons pivot and how it plays out and why it plays out. Also following the sun schedule, which I also shared before. I gave some clues about it, how does it work. And so what do you guys can see here? Let's take a look on the last episode here. And what we are expecting here, okay, I will jump into the technical analysis in a few minutes, okay? Just so for you guys to see how I see in the bigger time frame. Excuse me. So we know that we are going to have elections in November, and we also know we are expecting a big drop here that will conclude or maybe even a bit ahead the 50% for down theory, which is very likely to play out. And as you guys can see, if we end up with a strong sell, let's say in the next weeks or in the next month, I strongly believe it's going to happen this month and in a few weeks, we will have room to recover, and we may see, and we are likely to see, a strong reaction right before the winter. This is for the northern hemisphere, okay? So a reaction around the winter and right after November, which would align perfectly with the previous schedule that we had, okay? And okay, so if you guys have want to understand more about it, you can feel free to ask me questions on Twitter, and let's keep going. So I'm going back just for 1 second to show you again what we already talked about. Just a second, because I want to show you that we had previous correlation. Just 1 second for what I'm going to show you next. Okay, so stay tuned. Okay, so this is the example that I was going to show you. I already highlighted this event back in my last update for Dow Jones. And as you guys can see here, back in the day, this was the crash of the 70s. And so we had the big drop, which was, just a second, let me find the tool. Okay, hold your heads. Okay, so we had the first drop that was around 20%. If I'm not wrong, the last one was around 35 or 38. And then right after, we had a natural bounce to 780 range. Okay, that's the last bastion for the bulls pullback before bearish continuation. Okay, and if we measure all the other big corrections and crashes, you can check all the ones in my previous video that I covered before. It's all there, everything documented. So what we are seeing here right now, just 1 second please. Okay, so first I'm going from week to week, and then I will go from body to body. Okay, maybe there will be no difference, but that's the best way to do it. So as you guys can see, we are very close to 780 again, which was way aggressive attack on the golden mini. And as you guys can see, let me go to the weekly just for a second. Okay, just 1 second. Yes, let's go. So again, following my method that I use for my technical analysis, this was our bottom, this is our battle of midway, and now we are going to the top. Okay, I already called out this level here, 26 and 600 level in the Champions Club a few months ago, if I'm not wrong. And we can see it's not clear here on the weekly, but we can see it properly on the monthly. Okay, so we can see a loss, the beginning of a loss of momentum. Okay, which means as closer as we go to the 780-60, we know, so we know what's happening in the markets. Okay, with the QE infinity, and then we know there is no more much more firepower from the side of the bulls. Okay, it's like we don't have bulls at all. Okay, so we know what's happening, and then still we don't have all that traction and motion that we had before. Okay, so back in the day it was very, very clear, but now the line is starting to bend, and right below a very key level for retracements before continuation. Okay, so this is the nature of bearish continuation or correction. Okay, because also there is another thing here. Just for the sake of this example, let's say that we are going to have a full recovery. Okay, and then we will keep going up, happy and happy, and keep going. The issue with this scenario here, if we were able to make 100% retrace, it will lead us to a new high. Okay, and the issue with this scenario, if this keeps going, everybody can quit the job and buy stocks and become new millionaires. And we know that's not what's going to happen, right? So we have a loaded gun here, and like I said, in my opinion, we are very close to resume this whole move right here. Okay, we have targets for the downside. If I'm not wrong, just 1 second, let me check it. No, it's not this one. Hold on. Okay, so we have a target for later bullish continuation, which is, for example, is going to be 46368. Let me draw here properly. So it's 46368. So let me take out this guy. Okay, so this range here is the next target for the continuation of this bull run that we are in the US economy. Okay, if I'm not wrong, the target that we have for the downside, if I'm not wrong, you guys can check all the key levels in my previous video. Feel free to take a look. Just 1 second, please. It's 17,711. That's our first target. And the second target, which is so it's not the second one, but the measure 2. Just a second. Yes, right here. Okay, and so why we are looking to this scenario, let me make a line here. Okay, so why this level here, it's important for us, because for a proper retrace here, it would be better, way better, if we pierce the previous low, okay? Because we know that flat bottoms are not welcome, they are not friendly for us, for the bulls, right? So a breach in this level here with a marginal lower low will be way better for later bullish continuation. Okay, so this is the scenario that we are waiting for, and yeah, we will keep tracking to see how this one will develop. Now let's take a look in my previous chart, the working chart. Just 1 second. Let me see if I'm not missing something here on the monthly. Just 1 second. Okay, I'm not missing anything here. Let's go back to the working chart. Believe or not, this chart is and was worth a lot of money, because we traded this chart 2 times up and 1 time down. Just a second. Okay, so here on the left side of the screen, we had this bullish continuation pattern that I already mentioned before, and we made the targets, the first one, also the second one, and then we closed our positions. And right after the second target, okay, so we have 3 things here, okay, maybe 4. Let me see if I remember everything. That's a lot of info here. So the second target for the bullish continuation was just a little below the level 28657 that I mentioned before. I highlighted this level many times, and we didn't have confluence when we made the target. Okay, so the bulls needed confluence here on 28657 for later continuation. Later continuation means what? After the correction, or what has to play out, must resume before we were able to make new highs. Okay, so we had the trigger is right here, and as you guys can see, we made the trigger back on 2 of January, and right after the trigger was made, we started to print bearish patterns. As you guys can see, this is a bearish prisma, another theory that I am integrating in my technical analysis. That's also related with the mirrored trend. And then again we had the bear break, which was below 28657. My forecast was made right here, a little before, and on the black line. And as you guys can see, right after the bear break, we lost the previous low, which was a call for the bears, and then we made a marginal higher low compared with the previous one. Okay, this is very typical for bull traps. Okay, because people say, well, that's cool, that's okay, we are keep going up and that's it, let's keep buying. Well, that's not how it works. And then we had the rising wedge, and we had 2 bearish patterns inside it, and then we had the bear break that we were expecting for. Okay, and so for the bigger picture here, okay, just a second. So it was just a second. Okay, yeah, so around a 38% decline, which in my opinion, it's not enough due to the range of all the bullish activity that we had in the past. And now, just 1 second, let me fit the lines. Okay, so right now we are trading inside this range here, as you guys can see. It may look like dumb, but it's not. Okay, so the major thing for this structure here The golden key is 23,199. Okay, so this is the key to open this whole structure here. And like I said, we are waiting for a call to bears around this level here. Not only the bears, but for other people and institutions that I can call out. Sorry. And so what we may expect is a touch or even a small breach and then closing below. Okay, this will be the red flag. Also, we already had bearish activity around this level here, which is the 50 of the 50. If you guys watch my work, you are already familiar with this level. And then, so the scenarios that we are looking right now, those two. Okay, closing below this one will be a call, and closing below the golden will be another call for the bears. And like I said, it may looks like bad, it may looks like a nightmare, but it is not at all. Okay, here it is, my target for the 50%. So this, my friends, this is not a scenario for concern or for, you know, fear. This is going to be, in my humble opinion, the last major buying opportunity for stocks. Okay, some people may say, well, stocks are way overpriced, it's too expensive. Well, it doesn't matter. What matters is what the firepower of your money. Okay, so as you guys can see, a follow through in the correction here would be a big event. It's probably going to be a new record. And well, let's see how this one will play out. We are not trying to make guessworks here or pretending we know where this is going to take place, but we are watching and waiting patiently. Okay, no rush, no FOMO. We have all the time in the world. We have the targets, the way down and the way up. Okay, also we have all the levels in between. I'm not disclosing this chart, but I already posted on Twitter. Okay, so I believe I covered everything for this analysis. I know that's not too much popular. People don't care about stocks or Dow Jones, but it's a key to unlock a big box, and not only about stocks. Okay, perhaps one day people will care about such things, and that way they maybe preserve their wealth as well. Okay, so guys, I believe this is it for now. You guys are very welcome. Thanks for your time. Thanks for your patience. Don't forget to like, share, and subscribe. Marcus Cook, hey man, great work. Thank you. Thank you. Akre, Akribanamer, hi friend, burst us. Okay, guys, you guys are very welcome. Thanks for your time. I will see if I can make another update today, okay? Thank you and see ya.